Hello, folks. It's another Sunday. A week has passed. Time flies. And 2020 just about done. So, happy New Year's for everyone. And the reason we are looking at this video today, this is volume 10 of the Market Pulse newsletter we publish every week on Sunday. This newsletter is free. On the cover of this, and the format of the newsletter is every week we provide a chart in the daily time frame, typically, of each of these vehicles. So if you are interested in trading or investing in any of these vehicles, this free newsletter gives you an easy way to keep track of those investments on a weekly basis. So anyway, and let me point out that sometimes I put stuff in this digital edition of the newsletter, and I forget to talk about it in the video. So it's worth flipping through the PDF newsletter just to see did I say anything interesting in there. So, but the reason we're here today. I want to start with talking about inflation. Last week, this is a repeat of a chart I showed last week, or it was in the newsletter last week. This is the monthly time frame copper making a very impulsive movement in 2020. And so I was I'm still positing that the only three ways to explain that kind of price movement in copper. Number one would be robust demand because the economy was booming. Number two is inflation. And so, inflation, monetary debasement, in either case, it's a weakening of the US dollar. And then I'm not sure that we're actually seeing effects of this yet, but a real push towards the Green New Deal could could create a new source of demand for copper. And let me show you why that's the case. Um, this is how we use copper in the United States, and so if you let me give credit. This is from geology.com. This is from their website, so thank you to them. And you can see that copper is used throughout our economy, primarily in new construction, whether it office buildings, residential housing, you name it. Uh, Buildings need pipes, and pipes need copper and wire, and Um, so anyway, a booming economy and demand for copper, that's one of the things that could drive price higher. I don't think that that's what's going on when you consider the background with COVID and everything that the way the economy is being affected by COVID. Um, and so in this chart, what I'm showing is we've got copper on the left, the dollar on the right. Both charts are in the weekly time frame, and what we can see is that in 6 April, that's the vertical line here in both charts. 6 April, copper took off on its path upward, and the dollar took off on its path downward. And so, this is another thing that makes me believe that what we're seeing in copper, that's pure inflation. That's all we're seeing there. And let's keep in mind that when we look at any of the commodities, they are priced in the U.S. dollar, and so as the measuring stick, the U.S. dollar changes, the vehicles or instruments, commodities in this case, that are measured with this measuring stick, they respond. And I think that that's what we're seeing here. So, um, The St. Louis Federal Reserve Bank publishes economic data that is widely followed and quoted. This is the official information that our government publishes about our economy. And in this case, we're looking at a chart of the M1 money stock. This is not the broadest measurement of money, but it's a very broad. It is one of the broader measurements of the money supply, and of course, in 2020, it's gone vertical. I can't even call that a parabolic curve because curves don't make 90-degree angles. That's a hockey stick. Anyway, let's move on. So here we have the S&P 500. Equity markets, Santa Claus just didn't deliver this week. Now we still got 3 trading days coming up before the trading year 2020 ends. And so, Santa Claus maybe just got delayed, sitting on the side of the road with a busted ski or something. But anyway, the equity markets, they all look like this. They're bumping sideways, not doing anything exciting, waiting on a catalyst to go one way or the other. The markets are very overbought, and so a negative catalyst could cause a reversion to the mean quite easily. A positive catalyst, which is more what I would expect the last 3 days of the year, would obviously drive us. We're not going to make it to there, but would drive the equity markets higher. And a potential catalyst this coming week would be for the politicians to agree on a stimulus package before the year end. That could drive markets higher. So Dow, same thing, bumping sideways. Nasdaq, I had higher hopes for the Nasdaq because it is not as overbought as the other markets, but it's doing the same thing, just bumping sideways. U.S. dollar, out on the YouTube channel, I did a 6-minute video on the US dollar. It covers all 3 time frames, monthly, weekly, daily. You can go watch the video for the details. I suspect that the dollar last week, we got another relief rally, and now we're seeing price roll off, probably headed back to this lower median line. Yeah, that's what I would expect. Could be surprised and see the dollar try to do a bigger relief rally and head up towards the median line of this shift fork. And that's one of the possibilities I talk about in that video. And gold showing some strength. I'd call this basing action. We got a pop last week all the way up to, I think that was like 1906. Spike up, touched or tested the upper median line of this Andrews Fork, and then immediately dropped back off. And now we've got price, like I said, basing. But doing so above the 50-day moving average. So all in all, I consider that pretty good action in gold. And as we are seeing in all of the precious metals vehicles, or all the ones I've looked at, we got a low back here, and then a high, and then a higher low, higher high, higher low, and I suspect we're headed off for another higher high. And so anyway, uptrend in gold. Silver is not showing exactly that same kind of behavior, but we got the pop-up tested resistance at this is the lower median line of of an Andrews Fork. And now this looks to me like price is coiling, gathering energy below the top of this. It's a support resistance level, which is also the top of this trading range for the last couple of months. And so this looks to me like price is gathering energy to break out above the top of that channel and go back up here and mount a serious test on the that median line. Uh, let's see the mining stocks. So last time we looked, or last Sunday, we were up here, and of course I was showing my bullish bias by or hoping that the price would stay above the top of this downtrending channel, and obviously that's not what happened. We got another test back down at the this is the second lower extension of this Andrews pitchfork. And so we got another test of support down here and then a bounce. Now we've got price back again, testing the bottom of the channel top, testing the top of the channel from below. Um, and like I pointed out in gold, we've got a series of higher low, higher high, higher low, and assuming that we'll push off to another higher high. New uptrend is what I'm saying there. Let's see, what do we got next? Brent, no real change there. We've got price, just sideways consolidation above the 20-day moving average. Price target still at 53.50, although this next median line is a little bit higher. That's more like 54 at this point. And let's see, one last chart, I think. Interest rates, let's see. I think that bar had just formed. I think that was last week. Yeah. We had just seen what I suggested was another bottoming action along this median line of the modified shift pitchfork. From the big picture, that overall movement, this overall movement looks like it's just a sideways grind. But let me point out that price is staying above this gently uptrending median line. And so until this vehicle shows us it's going to do something different, the trend is up. I want to point out that on the YouTube channel this week, I have published 5 videos that you might be interested in. Got a couple of stocks that I looked at. Looked at the HUI, the gold index, and its next target. That's in the monthly time frame. Big picture, US dollar, that's all 3 time frames, as I pointed out earlier. The stocks. This Airbnb video, even if you're not interested in Airbnb in particular, I do demonstrate in this video how I use Fibonacci extension and Fibonacci retracement as price prediction tools, and so you might be interested in that. So and then of course there's the book, and I'm just realizing I sat here, I flipped through the charts and didn't go to the real charts. Let me do that just super quick. Apologize, folks. So there's the HUI. I'm expecting a bottom somewhere in this area, and then the next up leg, I think, or I believe that we'll see price come up and test this next big resistance level at 400. Wouldn't surprise me to see a pullback, of a tradable pullback at that point. And so that's the Fred chart. Fred is that's the acronym people refer to for this uh, Federal Reserve data, and so you can see that that's just incredibly. That doesn't really show the view. There it is in a 5 year. So now we've got, this is the same data, but we've scaled down. We're only looking at 5 years, and so you can see that in wherever that is, February, March, April of 2020. Oh, well, there it is. So yeah, early March, um, the Federal Reserve turned on the printing presses and just they went to town. Went to town. We looked at the equity markets, nothing there. There's the dollar chart. Yeah, yeah, there's nothing here that I haven't already covered, folks. So, like I said, Happy New Year's. Enjoy the rest of your holiday weekend, and I will talk to you soon. Bye bye.